So let's talk about accrual versus cash-based accounting and where they should be used and where they shouldn't be used. So accrual actually should always be used when transactions are not taking place immediately where cash is exchanged. Okay? That's like construction companies and other companies that do what we call credit sales. So anything where you perform a service or you deliver a product and you get paid later, like on net terms, net 30, right? But really that's something that you want to make sure that you stay on top of your cash collection, because you significantly decrease your capabilities of collecting your cash once you pass that 45-day mark. So you want to make sure that you are on top of that cash collection and you have a consistent follow-up policy with your clients from your employees, right? But anytime that you also take deposits from clients is another big reason to go onto accrual. That's something where you can put into work in progress, where you don't get taxed on it, where you would with cash. And that's a big thing for companies, because a lot of companies that offer professional services or have some sort of sign-up fee or onboarding fee, where you are taking an upfront payment for services that are going to be performed over a certain period, you want to be making sure that you are on accrual-based accounting. That's very, very important. Another major benefit of accrual-based accounting is it starts to flatten out your lines of revenue, which look better for the banks, honestly. So when you do that, you actually are allocating any revenue that you may have gotten from those deposits, like we mentioned earlier, okay, in the months that you perform the service. So if, say you're a construction company, right, and you take a deposit in December, you start work in February, right, you're going to actually allocate that revenue over into your February income statement, okay? And then the expenses also go there as well. So that helps even things out for you, where you don't get these massive swings in revenue and then these massive dips in revenue and high spikes in expenses, right? It looks better for the banks. It looks better for you as a business and being sustainable, all right? You need to understand how to increase more of your revenue and increase any type of leverage that you might be able to utilize when you are using accrual-based accounting, because it does help when you have contracted revenue and guaranteed revenue when you talk with banks about funding your projects. If you're going towards 8-figure, 9-figure, 7-figure, whatever size project, and maybe you need to go get some help, that is a good way to have good leverage when you walk into the bank and they look at what you have inside of your current assets. All right. But what about cash-based accounting? Well, cash-based accounting is really something that you should be utilizing when you are performing the transaction at the time that you deliver the service. Meaning like a retail restaurant or a retail store, those are places where you're going in, you're eating dinner, and you're actually paying for that service right there on the spot. Or you're ordering some food, maybe you're at a fast food restaurant, they deliver that to you, you pay for it before you get it, boom, and then you have that cash-based transaction where it makes more sense to track what your expenses are and what your cash is and revenue is in that given time period based on those transactions, right? So really, if you're most businesses, accrual-based accounting is going to be the best type of accounting that you're on. And if you are in that retail space, okay, that cash-based accounting is going to be the best thing for you as well. Look forward to seeing you in the next video. I hope this helps you. See you then.